Wasn't sure. So wasn't quite sure if people were gonna come or not. It's kind of interesting, yeah. State of the times. So a few weeks ago, when the markets were strong, kind of like to keep track of how many people show up to these webinars. A few weeks ago, when the markets were strong, there was above 25 people or so, and today there's like 5 people. Um, and you know, it was difficult to make a decision to exit Asana. It was difficult to make a decision to exit GigaCloud. It's difficult to make those decisions. It's really difficult. When when it comes to investing, I always say, listen, you should think about 15% annual growth rate compounded. And it reminds me of a King Lear story. King Lear, Shakespeare story. King Lear has 3 daughters, and he asks his daughters what they think of him, and the first 2 kind of come up with like some waffle, and the last one says, Cordelia says, "Oh, I love you as much as the daughters should, no more, no less." And King Lear goes through a difficult time, and uh, the first 2 daughters kind of are nowhere near to stand behind him, and then he asks Cordelia, "So Cordelia, what do you think of me now?" And she says, "I love you just as much as a daughter should, no more, no less." And the same phrase that she says, just from his different point of view, has the profound impact on him that he then says, "Oh, Cordelia, you're the only one I care about." And all she said was the same. And the same with me. When the performance was strong and I was saying, listen, 15% compounded is something that is reasonable and you should set your mind to. People were like, nah, 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 and the 15%, like, I can do that in a month. And I was no, it's not like that. Uh, and I said, you have to see it through a 6 month period or so. And I said to people that it's really difficult to imagine this, but at some point, the market is going to be red, 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 and there's going to be a lot of exhausted investors. And you're not going to believe this, but it's going to be really exhausting. And people are like, yeah, yeah, but what can I buy now? And I'm like, whatever you do in investing, don't be a hero. Never put more than 5% into any position. And people are like, nah, 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 what does this guy do? No, he doesn't know anything. I'm subscribing to his service, but I know more than him. And I feel myself like, it's like when you go to the garage and you take your car in and you're like having an argument with the garage dude saying, that's not the right oil for my car. You don't understand my car. That's all the guy does. You look at cars and you think you know more than the guy dealing with the cars. And the same here, I know it's really difficult to believe this, but every year there's a period in the market when sentiment washes away. It's difficult to imagine that, but it comes. And I was looking back and remembering um, when the COVID crisis happened on the 23rd of April. I woke up that morning and I wrote a piece that said the title was "We're Over the Worst." And the 23rd of April was actually the first time that the market started coming back up from that real severe trough. And I've been through these periods before, and I went through this period last August where people just didn't think that I could outperform. And for me, the biggest proof that I've got for myself that my strategy works is that we're now in March. The Nasdaq is down negative 10%. My portfolio is down 11%. Obviously, I've got to take Asana into consideration. but the sun is a 5% position. So I think myself, okay, even if it was down 50%, it's like, it's 2.5%. It's okay. I'll stomach that through. Now, what is difficult is not really for me to imagine that at some point the markets will stabilize. My challenge is to convince you that, yeah, yes, the markets will stabilize. You don't need to be a hero. You don't need to kind of go all in. People love these kind of buy the dip stories. People, but I've said this many times in different ways. What people want is excitement. They want action. Money in the market is not made by being active. What is important is that you give it time. Now, I'll explain how I see things unfolding. I'm not making a bold macro call. I have no idea about any of that. But I'm just saying, in general, we've been through a bit of a washout period. Today or tomorrow, the markets are going to be strong. It's going to be like really strong, green. Everything's going to be green. And people will be like, oh, buy the dip, buy the dip. And people are going to come in, buy the dip. Then the markets by next Monday are down like another 2, 3%, 5%, I don't know. And people are like, oh my God, this wasn't meant for me. Investing wasn't meant for me. And investing, I think about it like this, right? So, you have to figure out if this is really something that is in your nature that you're really trying to do. Because for me, I think, okay, this is my dream. Our performance is my dream. So when life comes and hits me down, I'm not going to stay down. It's just like, I'm not going to do that. Yeah, I'm going to take my lumps and it hurts and it's painful and it sucks to go through it. But at the end of the day, I've got to figure out, listen, if this is my dream and when life hits me down, do I stay down? Like, is that what I'm going to do? Or I'm going to try and adapt and try and figure out new ideas, try and see different ways of coming out of this situation. I know two things. Number one, out of every correction, this is what we're having a correction. Out of every correction, there's a new theme that's going to come out. Before, out of coming out of the correction in August, like quantum stocks were really strong. There's always a new theme that comes out of these correction periods, and it's really difficult to see them in real time. It's really, really difficult. But I'm hardworking and I'll figure it out. And investing, it sounds intelligent, sounds smart, and people like to try to be really smart, but you're not going to know when things are stabilized until quite a few weeks from now. Like the market's going to rally up in the next couple of days, then it's going to wash out again. And the purpose of that is these kind of quote unquote bear market rallies to churn through the capital of the investor. That's the purpose, to wash away your capital. And it's not that you need to try to catch that next wave coming, but a lot of times just sitting on your hands and you'll figure out, let's say, that in a couple of weeks, actually, this period was a lot of pessimism, but it's really difficult to see that because you're expecting to see that. And I'm telling you that it's going to happen, but you're expecting to see that today or tomorrow, and then it kind of washes away. And that's emotionally draining. And that's the purpose of this period. The market has a way of stabilizing itself. And I know it's really difficult to believe this, but this is a healthy market. A market that is running out of control, either to the upside or to the downside, is not a healthy market. It's very, very healthy for a market to go up, breathe, go up, breathe. That's really, really healthy. And it allows the core responsibility of the market, which is for there to be an ability for businesses to raise capital. When markets is just in a runaway period, that's not a good, healthy way. And crazy ideas come out, and it's really, really not conducive towards investing. And, you know, it pains me. It pains me to say, oh, I'm going to sell out of Asana at a 30% loss. That pains me, you know. I was so hopeful that this would turn around. I was really, really hoping that this would turn around and the sentiment had washed out. And, you know, from time to time, these kind of new narratives in the business don't gain any traction. And you buy into that idea that it's, you know, that things are going to improve, and then they don't. And it just becomes like a footnote in history. And the fact that the CEO himself is like, okay, you know, I'm to heck with this. I can't take it anymore. Let's get somebody else in. I think that just tells you everything you need to know that like they didn't even get someone from inside. And the CFO had already been like a new person come in. So they already had a change in the management team. So he's basically saying, you know, I can't I can't figure out a way to get the business to be competitive and viable with other offerings in the market. Um, so yeah, I've waffled on for longer than I wanted to. Um, I'm going to open up some questions and answers because I know that a lot of people would much prefer to discuss some of the ideas that didn't work out, like Asana or whatever you want to talk about. This is your time. Yeah, and I'm going to open it up if you want to say anything. Okay, because no one wants to ask any questions. Um, well, let me see who I can ask. Oh, my good friend George is in here. That's a shame. Um, what about like, okay, so thank you, Rusty, for your question. Um, so the question is about Sentinel-1. Generally speaking, in my expectation, any company going into the earnings calls right now, this period, is going to be brutal. I can't imagine a situation where a company goes in, even Tesla or whatever, goes into earnings. That this obviously Tesla wouldn't report now because they were reported, but I can't imagine any company going into earnings and the market say, "Oh, you know, this is the period to get back in and get excited." And I've seen that, and that's part of the problem that I knew that the markets were strong. I knew that the markets were strong, and I was trying my best to circle into names that will kind of like liquidity service, like Toast, like Unity. I was trying my best to go into businesses that expectations were low on the hope, on the idea that when the market sell-off came, I would be on these kind of cheap, low expectation names and that they wouldn't sell off as much. Well, they just sold off as much as everything else. And, I feel, it's like uh, the Nelson Mandela quote that I never lose, I just learn. So yeah, it sucked. Hand on my heart, I should have probably left 10% cash on the side for this period. I was trying my best, greedily buying things that I felt were cheap because I was expecting things to come slower at some point. Should have left 10% cash on the side. Um, it's difficult. It was really difficult. I was avoiding a lot of those kind of bullish names. And when the market came, it just kind of washed out everything anyway. So it didn't make a lot of difference. Um, trying to be careful. Um, so with regards to Sentinel-1, man, and also Rubrik also reports either tonight, I think, or tomorrow night. Two cybersecurity companies that I have in the portfolio. I have very little expectation. Hopefully, it won't blow up like 30%, like it is with Asana. You know, specifically with Sentinel-1, I'd said that either this business reports results that leads me to believe that I can get to $40 per share price tag by the summer when they report Q2, they report their next quarter. Either I get that feel that they can get to $40 or a quote a day. I've held this stock since I think it was December 2023, I think. So I've had it longer than I should have, and it's been a drag on my performance. And what I'm looking specifically with Sentinel One is I would like to see them grow. Well, let me rephrase. I'd like to see them guide that they can grow by approximately 28 to 30% into next quarter. My thesis had been that there will be some fallout from CrowdStrike's global outage that would start to percolate into Sentinel One's offering. But I said at the time, and I've been saying for a long time, with cybersecurity and a lot of these software names, the customer is locked in for, let's say, a period of 12 months or 3 years. So you have to wait for that subscription to kind of run out. Now, some would start running out kind of nowish, and they would be looking for other offerings, for example, Sentinel One. But it would take some time. But I would like to believe that when they guide for now for the next quarter, they've got a slightly misaligned fiscal year. I think that they're going to report Q2 2025 now. I can't remember if it's that, but they've got a misaligned fiscal year. But essentially the guidance for next quarter, if I don't see that they're going to guide to grow 28%, I feel that, it's not worthwhile me holding on, and I'll frustrate more people by saying, oh, it didn't work out. And I have to be ruthless. And I said in 2024, I said that no matter what happens, I'm going to have to make difficult decisions because in my mind, I have to. I've got no choice but to deliver our performance. And if I have to be, destroy my most valued ideas, I'll do that. Even if I felt, okay, this is going to work out, this is going to work out. Because in the market, you never know how it's going to work out. Nobody can predict the future. Yeah. Hi, Daniel. Do you have a question?
Yeah, hi Michael. Thanks for your yeah, I know this is not an easy time to
That's
be
fine.
talking about all these things and it's like you said that
Mhm,
King Lear story
mhm,
landed for me because yeah, like you said, you've been saying the same things and
mhm,
like I said, 15% in a bull market will seem like a cakewalk and then
mhm.
15% in a bear market will be like you've conquered
Yeah,
Mount Everest.
yeah, yeah, yeah.
So that's I definitely understand that. My question for you is like obviously the thesis isn't working out for some,
Mhm,
and the earnings are like,
mhm,
punishing
mhm,
these already depressed stocks. So,
mhm,
what are your thoughts on, I guess my thinking is that maybe it would be better to wait to sell some of these
mhm,
that you
mhm,
don't have a great thesis on just
mhm,
right now, but like,
mhm.
or like they haven't met your thesis, but
Yeah.
maybe just waiting another month
Mhm,
to see. And I know you said like they can always go down, but
mhm.
like if like let's say Rubric goes down, for
Yeah,
example, it's
yeah,
already depressed
yeah,
30%
yeah, yeah.
and it goes down another 20%. Well, like odds are it'll probably go up 30% once this phase
Mhm,
passes. But, as like others have mentioned, it's possible that it could keep getting worse. So
mhm,
how do you deal with like that? Because when
mhm,
you sell at a loss,
mhm.
you have to like double the gain,
Yeah, yeah,
right?
yeah,
Versus like waiting
yeah.
it out.
Of course,
Does
of
that
course.
make sense?
Yeah, perfect question. Thank you for asking it. So I try my hardest in each one of the pieces that I put out to give a very concrete free cash flow figure. If I see, okay, hypothetically speaking, with Sizzle or with Dave or Rubric or whatever, the stock comes down like it did with those companies, but I can see A, my free cash flow figure was right, or B, preferable, it's going to be higher than I estimated. I'm game. Even with Dave or whatever, the stock came down, I'm happy. I'll sit on my hands. I have absolutely no problem. If I see that my free cash flow figure was wrong, then I'm like, okay, back away. I'm not going to bother with this. Now, I would just say one thing: when the market comes back, not like I'm not talking about when the market stabilizes. I've been talking a lot about the market will. It's been coming down aggressively. The pace that it's coming down, it will slow down. It won't come that pace of falling, that panic mode. It will slow down, but that slowdown is not the same as strong market sentiment returning. Those are the two very different things. it may take until Christmas to kind of get that those animal spirits going again. So there are two different things here. Um, but if I can see that, let's say hypothetically, Ruber comes down, but it's the free cash flow figure is okay, that could be okay. But if it's the free cash flow figure is not okay, I don't need to hold on to that one because they can be something else in a couple of weeks that I can find that I can deploy the capital that can go up 100%. I don't need to hold on and cherish that thought. But you're right. If something comes down, it needs to come up much, much harder. But when those animal spirits do return, and it could be at Christmas, it could take time for those animal spirits to return. I want to be in the things that have the highest beta and the highest volatility, and that they will drive the portfolio higher. And it might not be Rubrik,
Hmm.
just because Rubrik was a high flyer in a period when the market was chasing kind of cybersecurity names. It might not be a high flyer 6 months from now. And just because it came up a lot and came down a lot doesn't mean much. Um, you want, like I said in the article I wrote about Asana, if I was to give a post-mortem to it, because I believe I owe it to people about this, if I was to give a post-mortem on what I should have done better, because I think that, to say, oh, it didn't work out is easy, I think that I owe it to people to kind of be a bit more kind of naked nerve and, be a bit more frank with people and say, listen, in hindsight, I used this kind of version of the PEG ratio. I use free cash flow rather than earnings. I should have stuck tighter to the multiple of free. So the price to free cash flow divided by the growth. Let's say hypothetically something is growing, let's say 40%. Sorry, if something is priced at 40% and it's growing at 20, 40 divided by 20 would be 2. So that kind of would be attractive. And I should have stuck harder to that, and I didn't stick hard enough to that line of thinking. I was thinking, okay, when the business turns around, the free cash flow margin will expand, and then it won't look as expensive as it looks right now. But it didn't work out. But when things do come around, I just want to be in the names that are actually going to drive the portfolio higher. Um,
Yeah, I understand your criteria is very
mhm.
specific, and that makes sense. I think that nobody could have predicted the CEO. I don't think that that's
Yeah,
just kind of one of those. Yeah,
it's so frustrating.
yeah,
It's really frustrating because
because he has like 50% of the shares in
yeah,
the company too. So it is kind of baffling.
that's why
I
the
mean, I
market
think
reacted as it did. That's exactly
yeah,
why the market reacted as it did, and that's why
yeah,
when I saw that, I was like, man, like this guy hasn't got a vote of confidence. Clearly, the market hasn't got a vote of confidence on this situation. Like, why should I be pounding my subscribers to stay here? Like, and it's
yeah,
painful. It's painful. It's really tough to make those decisions. But I know that people, not in the heat of the moment, but people want to know what to do. And it's important that I take those difficult decisions when, we're in the trenches. Yeah,
yeah. And I think like your point to picking some of those like maybe slower growth stocks, I do think even though that they're depressed, they're not as nearly as affected as things like the Credo or the
yeah,
MBIS
mhm,
or what else is like
yeah,
all
yeah,
those, AI stocks are just like huge
yeah.
waves, right?
And
And
it's just
so,
it's so funny,
yeah,
a few months ago, people would just AI to the moon, AI to
yeah,
the moon, and it was like you couldn't get enough AI, and now like the market has puked. It's like forget this AI thing, just completely puked up those names. But the irony is, it really is a bit like not as severe, but it really is kind of like on the hangover of the dot-com bubble. The dot-com bubble is why we're here today on this call. Like that's really why we're here. But it kind of got ahead of itself, but it's a healthy market. It's really, really healthy. And I know, obviously, I'm talking about book. I know that, but I am excited. I am excited. I've been through this period, and I know I can navigate my way out. I don't know how. So it's a bit like I'm kind of there's a really long tunnel. It's a bit kind of fuzzy, and I'm just kind of grabbing my way around. But I'm really, really excited to kind of grab and go. Yeah. Is that Marcus still on the call? He wanted to ask a question. Not sure if he's. put his hand up, I think. I'm going to see this. Um, if Mark, if you did put your hand up, you gonna ask your question? Uh,
Yes, sorry. Sorry. I'm not on the camera.
oh, sorry, it
The
was Marius.
connection is a
Sorry,
bit
I mispronounced your
unstable.
name. I said your name wrong. I'm sorry. It was Marius.
It's Marius.
Sorry.
Hi, hi all. I wanted to ask if you're overly concerned if a recession might be on its way, and yes, if what this might do to the portfolio if you might adjust your portfolio if the tariffs kick in and yeah, if the overall environment deteriorates.
Um, from the sound of your voice, you sound kind of like European. I don't know if you remember, around 2011 or so, there was like the whole, the market was really throwing up. It was all about this Greek crisis. Everyone was like, oh my
Yeah,
God, like the Greek crisis, this is it. This is the end of the European Union. Everything is going to blow up, blow up, blow up. And like you look back now and it's like, forget about it. And that was not even a bleep on the radar. But at the time, it was so insane. The voices, everyone was like, oh my God, Greek crisis. Like, and it's like, it doesn't make a lot of understanding to me why the US mature financial market was so caught up in what's happening in Greece. Like, I live in Europe. I don't even care what happens in Greece. But it seemed to be the market was really caught up with it. But in fact, I think that the market just wanted to latch on to a story. Okay. So when markets are going strong, people give a story. The story is AI. When the markets cool down, people give a fear to either recession or inflation or Trump or this people latch on. But it's just that markets go up and they come down and people latch on a story and they extrapolate to perpetuity. By that I mean people feel like this is the end of the world right now, today, as we're talking, and think that that's it. That's it, game over. It's this is like everything is going to go to hell. But the simple aspect that we are talking about this right now about people are concerned and fearful, rightly so, about investing. But the simple fact that we're having this active discussion is already in the price of the companies. It's already priced in. And in 2022, like a few couple of years ago, I remember everyone was like, okay, recession is coming. In 2022, people were like, the recession is coming at the end of this year. The end of this year. And it kind of got into the summer, and people were like, no, the recession is coming in 2023. And then kind of 2023 was really like a good year. And they were like, oh, back end of 2023, early 2024. And there's always going to be a narrative attached when things come down because the financial media makes a lot of money from selling fear. Now, obviously, I'm a long only business, so I'm biased. But I've also recognized, those times when it's easier to make a bold call at either extreme. When things get really, really depressed, it's easier to make a good call. And when things get really, really extended, it's easier to make, okay, things are heated right now. Right now, things are really, really tough, man. So the odds are that from this point on, over the next 6 months, things will be a lot better, really a lot better. And that fear of interest rates, debt ceiling, tariffs, Trump, it will all have gone. And there'll be something else. Maybe people will be talking about quantum computing. Maybe people will be talking about Chinese stocks. Trying not to get too concerned what's happening in the heat of the moment, if possible. Try to think about, okay, the diversification of the portfolio. And ultimately, I think that, and people mock me for this, but having 20 stocks in the portfolio gives you sanity because at some point when things return to normality, there'll be a few names in the portfolio that are really picking up momentum and it will give you a lot of sanity. Conversely, when a person's really concentrated, you are going to be emotionally wasting yourself because you're like, oh my God, things are really, really bad right now. And you kind of get too caught up. A lot of investing is just you allowing yourself in a fight against yourself to stay in the game. It's really a longevity game. It's not trying to kind of say, oh, a lot of people like to make these calls about, oh, there's a recession coming or things like that. And, a recession will come, but it's not that people, it's, it's not that people know exactly when it's going to come. And there's a quote from Peter Lynch that says, more money has been lost in an anticipation of a recession than in the recession itself. By that, it means that people get so fearful in anticipation of the recession that they miss like stocks do like 20, 30, 40% like up. And like the index, obviously the portfolios are much more volatile, but people miss so much of the upside and they kind of call that correction of, let's say, 15%, but they miss the previous 40%. So just to summarize, there will be a recession at some point. But to say that there's a recession now is not new news because so many people are already thinking about that. And it's easier to make the call that things will be better from this point over the next 6 months. I would not have said that before. I was not saying that. And throughout back in the 2024 and earlier this year, I was not saying that things are going to get better from here. I was trying to be a bit cautious with people and saying, let's just see how it goes. Don't be a hero. And now I'm saying, okay, things have turned around and things are brutal and it will get better. Hope I answered your question.
Okay, thank you. Yeah, I guess there's just a lot of noise right now. Also, yes, you're right. I'm from Germany, and it's a hard situation right now here.
I couldn't agree more. I mean, it is a hard situation. It's a hard situation for everyone, whether you're Warren Buffett or whatever else. It's hard for everybody. But you need to position yourself in a way that you allow yourself to stay in this game. That's really the key to investing is time. It's not about timing the market, but it's the time in the market. Position yourself mentally to stay in the game. And I know that people don't like me saying this, but this is exactly why I don't use stop losses, because I don't know when things are going to get better. At some point, things will get better, but it'll only be obvious after the fact. And you can't tell in real time because in real time it goes up, it goes down, it goes up and it goes down, and it drains you. Yeah.
Yeah, but one of the things is the tariffs. Companies at this point, it's the not knowing how it's going to impact their earnings in the next 3-4 quarters. And I think it's the uncertainty and the consumer sentiment. And I do agree with everything you say. My life experience has been what you're saying, that you stay in, my portfolio has come down by half, by 2/3, stay in it. And because those big days, you're going to miss them. But still, it is nerve-wracking because of all the noise and the chaos that's going on in the United States right now.
Yeah, but what is? I agree with what you said, but is that net new news? These are things that we've been talking about. We've been talking about them for a long time, and everyone is now writing about it. But these aspects were known a few weeks ago, even a few months ago. You and I have been actively talking about these considerations. You wrote as well. I'm not going to say the swear word, but you wrote, Trump's sandwich. Remember that you wrote that? And so it's not new news. We have been through this, and we know.
We didn't think he would. It's games, but now it's like he's really doing it, and every economist says it's a bad idea. It's going to hurt everyone. There's no winners in this, and he's still not backing off. And I think that's what's frightening people.
Yeah, but just remember, okay? So, presidents come, presidents go fast. Stock market goes up over time, okay? Secondly, at either extreme, the noises get louder. When it's particularly hot, the market, it's like everyone's euphoric, and the news is all about AI. And now it's all about pessimism. So it's just like a pendulum, okay? You don't need to kind of have a very strong view most of the time in the market. Most of the time in the market, the pendulum is in the middle, and you don't have to have a strong view. You can go 50-50 up or down. But at either extreme, the call is slightly easier to make. And I believe that right now there's a lot of anxiety. That's not to say that the Nasdaq can't go down another 10%. Easily could go down another 10, 20, 30. It can easily be the end of the times. But it's much better, in my opinion, to get that bloodbath now. Just get that bloodbath, correct from here, get a firmer footing, and then move higher, rather than just spend a whole year of kind of small cuts here and there. And it's really brutal. That's psychologically draining. Let's just get it done, dusted, and then move on from there. I feel that, I do think that there's like a pendulum. I do think that things get so one-sided, and it's just one side kind of overwhelms the story.
Yeah.
Yeah.
I've always held on, but I'm older now. So I did sell a bunch of stuff yesterday, just because I'm older and I don't know, why put myself through it. I might jump in, but I think I'm going to wait a little bit.
Yeah. Okay. So can I just it's not my strategy.
Oops, you froze. I'm sorry.
I think you froze. I don't know if it was you or me. Can you still hear me though?
Hello. Yes, I froze. I think. Yeah.
Okay. Yeah. So I don't know. It's not my strategy, but what I will say, if you allow me to say about you, so I didn't sell. I mean it. But if you did sell, and the markets tomorrow or Thursday, they're particularly strong, don't be a hero. Don't go all the way back in thinking that you missed out on something. If you decide to exit, don't let the market just burn up your capital. It will be really, really strong at some point. Like maybe next week, everything's going to be green and it's going to be like, don't be a hero.
I look at the 200-day moving average. That's usually a pretty good indicator. So, NASDAQ's below its 200-day moving average. And then they talk about, that death cross, golden cross. I sort of follow that a little bit now instead of just letting it ride, which has done very well for me over time. But like I said, now I really think about time, being older. So I kind of follow those technical indicators.
And that's fine. It's absolutely fine. You follow your strategy. Take what you want from my advice. That's absolutely fine. But just my only thing is, when things do come back, don't be a hero and say, I'm going to go all in now. Just be slow and steady, okay? Slow and steady. Just don't be a hero, okay? Okay. Thank you very much, everyone, for the call. And I hope to see you next week or the week after. Thank you very much.
Thank you.
Bye.
Bye-bye. Have a
Thank
good
you.
day.
Bye.